In today's video, we will cover 5 topics including 2 illustrations. Through these 2 illustrations, we will learn in detail how revenue and expense transactions are considered while calculating the profit or loss of the business under cash basis of accounting and accrual basis of accounting. Sit back, relax, and watch the full video. Let us now understand the advantages of accrual basis of accounting. Advantage number 1, accurate financial picture. Accrual accounting provides a more accurate depiction of company's financial position by recognizing revenues and expenses when they are incurred, regardless when the cash transaction occurs. This allows for a clearer view of profitability and financial performance of the business. Advantage number 2, revenue and expenses matching. It aligns revenues with the expenses incurred to generate them, which is crucial for assessing the true profitability of specific periods. This matching principle ensures that financial statements reflects the actual economic events of the business. Advantage number 3, improved financial forecasting. By recognizing transactions when they occur, business can better anticipate future cash flows and financial needs. This enhances the budgeting and financial planning accuracy. Advantage number 4, better management insights. Managers can gain more precise insights into business performance and operational efficiency. For example, by tracking outstanding receivables and payables, help in making informed decisions about managing the cash flows of the business. Advantage number 5, compliance with accounting standards. Many accounting standards and frameworks such as generally accepted accounting principles and international financial reporting standards requires or prefer accrual accounting. Using accrual accounting helps ensure compliance of these standards. Advantage number 6, enhanced comparability. For businesses that are part of large group or those that needs to compare financial results with other companies, accrual accounting provides consistency and comparability, making it easy to analyze and compare financial performance. Advantage number 7, investment and financing. Investors and creditors often prefer accrual accounting because it provides a more complete view of company's financial health, including accounts receivables and payables. This can make it easier to secure financing or attract investors. Let me now take you through the disadvantages of accrual basis of accounting. Number 1, complexity. Accrual accounting can be more complex than cash basis of accounting. Second, increased costs. Due to its complexity, accrual accounting often requires more extensive accounting resources, which can lead to higher costs for accounting services, software, and personnel. Number 3, cash flow challenges. They might show a profit on their income statement while struggling with the cash shortages because they have recorded revenue before receiving the cash and incurred expenses before making the payments. Number 4, increased bookkeeping efforts. Maintaining accurate accrual records requires diligent bookkeeping and frequent adjustments. Number 5, potential for manipulation. The flexibility in timing, revenue, and expenses recognition can sometimes lead to manipulation or misrepresentation of financial results. Let us take a business scenario and calculate profit or loss of a business under both cash basis of accounting and accrual basis of accounting and understand the difference between the two. Now below is the summary of financial transactions of Mr. X's business for the financial year 2023. Income earned and received for the business is 4.5 million. Amount of income received in advance is 150,000. It means the customer has paid advance and the goods are still not delivered. The income which is accrued but not yet received is 120,000. Business expenses which are paid during the accounting period are 2.75 million. The expenses which are not incurred but paid in advance are amounting to 400,000. It means 400,000 is paid for expenses related to future periods. Business expenses incurred but not paid are amounting to 275,000. It means business expenses of 275,000 are related to the financial year 2023 but are still not paid till the end of the accounting period. An amount of 75,000 is paid for Mr. X's personal expenses. Now let us understand what will be the profit or loss of Mr. X's business in case he adopts cash basis of accounting. An income of 4.65 million will be considered under cash basis of accounting, which comprises of 4.5 million income received and 150,000 income received in advance. Please note that income accrued but not received amounting to 120,000 will not be considered under cash basis of accounting. Now business expenses of 3.15 million will be considered, which comprises of 2.75 million business expenses paid and 400,000 business expenses paid in advance. Please note that accrued expenses of 275,000 will still not be considered. Therefore, net profit of the business under cash basis of accounting in this example will be 1.5 million. Let us now consider the same business financial transactions and understand how the profit or loss will be calculated if accrual basis of accounting is adopted. Revenue of 4.62 million will be reported, which comprises of income earned and received 4.5 million plus income accrued but not received amounting to 120,000. Please note that income of 150,000 received in advance will not be considered as it is still not earned. Now for business expenses, 3.025 million will be considered, which comprises of 2.75 million business expenses paid and 275,000 business expenses incurred but not yet paid. Please note that expenses amounting to INR 400,000 paid in advance will not be considered under accrual basis of accounting. Therefore, the net profit under accrual basis of accounting will be 1,595,000. Net profit under cash basis of accounting is 1.5 million, while under accrual basis of accounting it is 1.595 million. I sincerely hope with this illustration the treatment of income and expenses under cash and accrual basis of accounting is clear. In both the cases, INR 75,000 spent on Mr. X's personal expenses will not be considered for profit calculation as it is not related to business. It will be treated as a drawing and will be reduced from the capital of Mr. X. Let us further strengthen our understanding of cash and accrual basis of accounting with another example. Cash and credit sales of a business is 500,000 and 200,000 respectively. I hope you remember what is cash sales and what is credit sales. Yes, cash sales is when money in exchange of goods and services is paid immediately, and credit sales is when it is promised to be paid in future. Outstanding staff salary is 4,000 and outstanding electricity expenses are 1,000. While 2,500 has been paid as advance insurance, I sincerely hope we understand these terms. Yes, outstanding salary and outstanding electricity expenses means that these expenses are related to the accounting period but are still not paid till the end of the accounting period. Insurance paid in advance means amount paid for the future period and it is a prepaid expense. Now we have received an income of 5,000 plus 1,000 income is also received in advance. We also have an amount of 3,000 income which is earned but not received. Let us analyze these income transactions one by one. Income received means that the income is related to the accounting period and cash is also received. Income received in advance means there is an inflow of cash but income is not related to the accounting period. Now income earned but not received means income is related to the accounting period but it is still not received. There is a cash purchase of 275,000 and a credit purchase of 125,000. For cash purchases, value is paid immediately and for credit purchases, it will be paid at a future date. Staff salary of 44,000 and electricity expenses of 11,000 are related to the accounting period and are also paid during the accounting period. Now, important point to be noted for the payment of insurance expenses of 10,000 is that it also includes 2,500 which is paid for future periods. Let us calculate the profit or loss in case cash basis of accounting is followed. Total revenue of 506,000 will be considered, which includes transaction serial number 1 cash sales 500,000, serial number 6 income received 5,000 and serial number 7 1,000 income received in advance. Since we are using cash basis of accounting, credit sales of 200,000 and income earned but not received 3,000 will not be considered. Total business expenses of 340,000 will be considered, which comprises of serial number 9 cash purchases of 275,000, serial number 11 staff salary of 44,000, serial number 12 electricity expenses 11,000 and serial number 13 insurance expenses of 10,000 including prepaid insurance of 2,500. Please note that the credit purchase of 125,000 will not be considered under cash basis of accounting. Therefore, the net profit under cash basis of accounting will be 166,000. Let us now use accrual basis of accounting to find out the profit or loss by considering the same financial transactions displayed on your screens. Under accrual basis of accounting, total revenue of 708,000 will be considered, which comprises of serial number 1 cash sales 500,000, serial number 2 credit sales of 200,000, serial number 6 income received 5,000 and serial number 8 income earned but not received 3,000. Always remember, under accrual basis of accounting, revenue is recognized when it is earned and it does not matter when it is actually received. This is the reason that the income received in advance 1,000 is not considered. Under accrual basis of accounting, both cash purchases of 275,000 and credit purchases of 125,000 will be considered. Now, so far as staff salary is concerned, both staff salary paid 44,000 and outstanding salary of 4,000 will be considered. Similarly, for the electricity expenses, both electricity expenses paid 11,000 and outstanding electricity expenses of 1,000 will be considered. Please pay attention to the treatment of insurance expenses. Out of the total insurance expenses payment of 10,000, only 7,500 will be considered. Therefore, under accrual basis of accounting, the net profit of the business after considering the total business expenses of 467,500, the net profit will be 240,500. Let us now understand the difference between the accrual basis of accounting and cash basis of accounting. Number one, nature of transactions. Under accrual basis of accounting, both cash and credit transactions are recorded. While under cash basis of accounting, only the cash transactions are recorded. Number two, revenue recognition. Under accrual basis of accounting, revenue is recognized when it is earned, regardless of when the cash is received. While under cash basis of accounting, revenue is recognized only when the cash is actually received. Number 3, expense booking. Under accrual basis of accounting, expenses are booked when they are incurred, regardless of when cash is paid. While under cash basis of accounting, expenses are only booked when the cash is actually paid. Number 4, timing of financial statements. Under accrual basis of accounting, financial statements reflect the company's financial position and performance more accurately at any given time because they include all earned revenues and incurred expenses. While under cash basis of accounting, financial statements might not accurately reflect the company's financial position at a specific time because they only include cash transactions. Number 4, matching principle. Accrual basis of accounting adheres to matching principle, which states that expenses should be matched with the revenues they help to generate in the same period. While the cash basis of accounting does not adhere to matching principle, as expenses and revenues are recorded only when the cash transactions occur. Difference number 6, complexity and accuracy. Accrual basis of accounting is more complex and requires more detailed record keeping. It provides a more accurate financial picture, especially for large and more complex businesses. While cash basis of accounting is simpler and easy to manage, especially for small businesses or personal finances. It is less accurate in reflecting the company's financial status at a given time. Number 7, regulatory and reporting requirement. Accrual basis of accounting is required by generally accepted accounting principles and international financial reporting standards for public companies and large entities. While cash basis of accounting is often used by small businesses or sole proprietors, it is not accepted for large companies or entities that needs to comply with GAAP or IFRS. Difference number 8, impact on taxation. Under accrual basis of accounting, taxable income is based on revenues earned and expenses incurred, which might differ from the actual cash flows. While under cash basis of accounting, taxable income is based on actual cash received and paid, which might be simpler for tax purposes but can also cause cash flow issues. Number 9, usefulness for business management. Accrual basis of accounting provides a better basis of forecasting and budgeting since it reflects all earned revenues and incurred expenses. While cash basis of accounting is useful for understanding cash flow but less effective for long-term planning or assessing overall business performance. Number 10, legal position. Accrual basis of accounting is recognized by the Companies Act 2013, while the cash basis of accounting is not recognized by the Companies Act 2013. Number 11, prepaid and outstanding expenses. Prepaid and outstanding expenses are accounted for in the profit and loss account under accrual basis of accounting, while under cash basis of accounting, prepaid expenses and outstanding expenses are not adjusted in the profit and loss account. Number 12, accrued income and income received in advance. Accrued income is accounted in profit and loss account, while income is received in advance is shown in the balance sheet under accrual basis of accounting. While under cash basis of accounting, accrued income is not considered, while the income received in advance is considered as the income. Question number 6 on your screens is, what do you understand by accrual basis of accounting? The answer is, the accrual basis of accounting is a method where revenues and expenses are recorded when they are earned or incurred, regardless of when the cash transactions actually occur. Question number 7, differentiate between cash and accrual basis of accounting with reference to the booking of income. Answer is, under cash basis of accounting, only those incomes are recorded which are received in cash during the accounting period. While under accrual basis of accounting, income related to the accounting period is recorded when it is earned, irrespective of the fact whether the cash is received or not. Question number 8, Give two advantages of cash basis of accounting. Advantage number one, simplicity. It is a straightforward and easy to understand method. Business only need to track cash inflows and outflows, which simplifies bookkeeping and reduces the likelihood of errors. Advantage number two, reduced complexity. There is no need to deal with accounts receivables, accounts payables, outstanding expenses, prepaid expenses, accrued income, or the income received in advance, which simplifies the accounting and reduces administrative burden. Question number 9 on your screens is give two disadvantages of cash basis of accounting. Number 1, misrepresentation of financial position. Cash basis of accounting can give an inaccurate picture of company's financial health because it does not account for receivables and payables. This can make it difficult to assess the true financial status of the business. Number 2, delayed recognition of revenue and expenses. Revenues and expenses are recorded when cash change hands, which means that the transactions may not be reflected in the period they actually occur. This can distort the financial performance and profitability analysis of the business. Question number 10. Give two advantages of accrual basis of accounting. Number 1. Accurate financial picture. Accrual accounting provides a more accurate depiction of company's financial position by recognizing revenues and expenses when they are incurred, regardless of when the cash transactions occur. This allows a clearer view of profitability and financial performance. Number 2, revenue and expenses matching. It aligns revenues with the expenses incurred to generate them, which is crucial for assessing the true profitability for a specific period. This matching principle ensures that the financial statements reflect the actual economic events of a business. Question number 11 on your screens is under accrual basis of accounting, expenses are recorded. The answer is when they are incurred. Question number 12, under cash basis of accounting, revenue is recorded on. The answer is receipt of revenue. Question number 13, accrual basis of accounting recognizes outstanding expenses and prepaid expenses. True or false? This is a true statement. Question number 14, under accrual basis of accounting, both cash and credit transactions are recorded. True or false? This is absolutely true statement. Question number 15, under the cash basis of accounting, expenses are recorded when they are incurred. This is a false statement. Our next video on 30th November is going to be a special one. We will cover 60 plus questions and answers under 4 categories as displayed on your screens on cash basis of accounting and accrual basis of accounting. If you like the content of our channel and our way of explaining the topics, please like, comment and subscribe to our channel Accounting Buddy. Please do not forget to press the bell icon so that you do not miss our latest posts. Thank you and goodbye.